Here's a summary of Unilever's 2025 Q4 earnings call transcript, designed for easy reading. Unilever's 2025 full-year results. A solid year of transformation and focused growth. Unilever has delivered a solid year in 2025, aligning with their commitments despite challenging market conditions. The company has made significant strides in both performing well and transforming the business. Key financial highlights for 2025. Underlying sales growth, 3.5%, driven by 1.5% volume growth and 2% price growth. Sequential improvement. Q4 saw growth accelerate to 4.2%, with a step up in volumes to 2.1%. Power brands performance. These brands, representing over 78% of turnover, grew 4.3% overall, with strong Q4 growth of 5.8%. Investment and focus are heavily directed towards these power brands. Turnover, €50.5 billion, down 3.8% due to significant currency headwinds. Excluding currency, turnover increased by 2.3%, driven by underlying sales growth, partly offset by portfolio actions. Underlying operating margin expanded by 60 basis points to 20%, demonstrating a structurally strong margin profile. Gross margin increased by 20 basis points, marking the third consecutive year of expansion, now at a structurally higher 46.9% post-ice cream demerger. Overheads reduced by 50 basis points, with the productivity program significantly ahead of schedule. Underlying operating profit, €10.1 billion, a decline of 1.1% versus the prior year, impacted by currency. Underlying EPS rose to €3.08, up 0.7% year-on-year on a constant currency basis. Underlying EPS grew by 9.5%. Free cash flow, €5.9 billion, representing 100% cash conversion. Net debt, €23.1 billion, with net debt to underlying EBITDA at 2x. Return on invested capital, ROC 19%, benefiting from the ice cream demerger and remaining in the high teens. Shareholder returns, €6 billion returned in 2025 through dividends and share buybacks. Divisional performance and highlights. Beauty and Wellbeing delivered balanced growth of 4.3%, with strong performances from Dove, Vaseline, and premium brands like Hourglass and K18. Wellbeing, led by Liquid IV and Nutrafol, was a key growth engine. Personal Care achieved 4.7% underlying sales growth, with strong momentum in the U.S. and positive contributions from deodorant innovations and skin cleansing. Acquisitions of Wild and Dr. Squatch enhance exposure to premium segments. Home Care grew 2.6%, with improved sequential performance driven by Europe and India. Innovations like Wonder Wash and Domestos Power Foam are gaining traction. Foods delivered 2.5% underlying sales growth, ahead of the market, driven by emerging markets. Hellmann's flavored mayonnaise range continues to perform well. Management's forecasts for future quarters. 2026 outlook. Underlying sales growth expected to be at the bottom end of the multi-year range of 4% to 6%. Underlying volume growth, at least 2%, maintaining a focus on volume-led growth. Underlying operating margin, confident in a further modest improvement, benefiting from a structurally strong gross margin and value chain interventions. Commodity inflation, expected to be lower than 2025, but with ongoing pressure in select materials. Capital returns, a new share buyback of €1.5 billion announced, with continued expectation of sustained attractive and growing dividends. Significant risk factors, challenging market conditions. Management anticipates continued challenging conditions with soft markets globally. Currency headwinds. The company has experienced significant negative currency impacts, which could persist. geopolitical and macroeconomic uncertainty. These factors can impact consumer demand and operating environments, particularly in emerging markets. Competitive landscape. While Unilever focuses on its power brands, managing the performance of non-power brands and smaller peers is a consideration. Key statements from management. CEO Fernando. We have delivered a solid year, fully in line with our commitments despite challenging conditions. 2025 has demonstrated our ability to evolve. We delivered a good performance, delivering competitive volume growth, positive mix, and gross margin expansion, with sequential improvement throughout the year. We have entered 2026 as a simpler, sharper, more focused business, better able to capture the many growth opportunities that exist across our categories and our channels. Our performance in 2025 gives us added confidence that we are on the right track. He emphasized the transformation of brands, organization, and people, with a focus on key growth priorities in beauty, well-being, personal care, the U.S. and India, and premiumization with e-commerce exposure. He also stated, a simpler, more focused company is not an end in itself. It is all about delivery, consistent delivery. That's what we are concentrated on. CFO Srini. All the figures that I refer today are on a continuing basis, which excludes ice cream. All growth, margin, and cash metrics are presented on a like-for-like basis. He highlighted the sequential improvement in Q4, the strong performance of power brands, and the structural improvements in gross margin post-ice cream demerger. He also noted that the productivity program is ahead of schedule and confirmed an ongoing cultural shift towards lower overhead costs relative to turnover. Regarding 2026, he expressed confidence in modest margin improvement and stated, our structurally strong gross margin will continue to benefit from value chain interventions, fueling ongoing reinvestment into our brands. Lowlights. Turnover decline. The reported turnover was down due to significant currency headwinds. Underlying operating profit decline. Despite sales growth and margin expansion, profits saw a slight decline due to currency impacts. Performance gaps. Acknowledge performance gaps in areas like home care and deodorants in Brazil and U.S. hair businesses, with expected improvements in 2026. Prestige beauty challenges. While some brands are performing well, others, like Dermalogica and Paula's Choice, require attention, with the prestige market undergoing significant change. In summary, Unilever has navigated a complex year by focusing on portfolio transformation, brand enhancement, and operational discipline. The company is entering 2026 with a leaner structure, a sharper focus, and a clear strategy to drive growth and shareholder value.